Closing beat, everybody. Happy Thursday. How you doing out there? If I'm honest, I'm a little tired. It was a good week, right? Lots going on here. And, well, thank you for joining us. It's our Closing Beat show. We're financial advisors here at Jazz Wealth. And we just put the show together to kind of explain how the days have gone, try to keep it unbiased. We like focusing on stats and just general historical statistics, forward-looking statistics, things like that. And going over the markets. We'll share how that went today. We're also playing a game called Guess the Dow. We'll announce the winner on Monday, although we already know who it is, because the markets aren't open tomorrow. The stock market's closed tomorrow. Jazz Wealth will be closed tomorrow, and there'll be no Closing Beat show as well. So we'll see you again on Monday. Well, if you want to play the game, go for it there. You've got till Saturday at noon to guess for next week if you want to play the game. We also got our Jazz Artist of the Week. We'll wrap up the week. Too short of a week for this Jazz artist, Brian Culbertson. Brian Culbertson, great one. He's got the live album that he does is incredible, and there's a song on there called Serpentine Fire, which many of you probably know from Earth, Wind, and Fire. Yep, it's the same song there, just his version of it. Really good, man. Just really good. Music needs more horns. It's not enough horns in music these days. Real horns. Anyways, so let's get started here. We'll cover this and get out of your way so you can go enjoy your long 3-day weekend. 285 on the Dow to the upside today, more green. 39 points higher on the S&P, 62 on the NASDAQ there. We wake up today to find out the Fed's going to put in $2.3 trillion more dollars. Just trillion here, trillion there. Where are the trillions coming from? Like, we're just making up trillions at this point. Anyways, $2.3 trillion, not $1 of that is going to help an individual. They are purchases of junk bonds, ETFs. They're going to be doing loans of different kinds to businesses and things. So, well, that's what they're working on there. Stock market enjoyed that there. And it overshadowed the jobless claims numbers. Unbelievable if you got a chance to watch that. We got about 14 million people in just the last couple of weeks now unemployed. I had to zoom in to show the numbers here, right? This week we got 6.6 million. Actually, this is last week. 6.6 million new added to the list. Although it was a small downtick from where we were, it was still much more than expected. We were expecting about 5 million there, so crazy. And if you want to zoom out to any degree, this gives you an idea of the severity of the magnitude there. There's your weekly initial jobless claims numbers, and then, of course, the virus, shutdown and everything that we've had going on there. So very interesting, right? Very interesting. Anyways, you got the stock market here. Back to that halfway mark. We are, as described over the last couple days, we're at the neutral point. We're at the glass half full or half empty question mark point. And so that's where we found here today. Let me show you one more thing here, the number of cases per day. This was also sort of positive. The number of cases in most states has actually been dwindling down throughout the week. New York is the only one that saw an uptick overnight. But you can kind of see there, I've got some of the bigger ones on the list for you: New Jersey, Connecticut, Michigan, Florida, California, Louisiana. You can look these up if you want to look through those. But all in all, we've got a tapering off of the number of new cases. Of course, that's good news, right? It's good news for the market in general, and it's good news for, well, anybody that's wanting this thing to just go away. So stock market-wise, you basically just had a good day. There was nothing else to really say about it there. The one negative, there's a couple negatives, but the one negative there was tech. So tech kind of dragged us down there. You notice that the NASDAQ, if I go over there, the NASDAQ held back. It was the weaker of the major indices today. Held back a little bit, and that's all going to be tech related there. If I do a one-day chart, we'll call it an intraday chart, every blip throughout the day. This is from this morning all the way to the close. You notice real quick, we always say you need tech and financials to move the markets higher in a significant way and to hold that rally. Well, today you had financials start off strong and immediately tech started to taper off, and that really put a pause to financials for the day. I mean, that's it. You can see it clear as day there where tech started to participate, just couldn't get it done. And so that's basically what you have there. I'll close all these out. We'll move on. If we look at the S&P 500 there, we now have it's over a 25% rally off the lows. That is impressive. 25% off the lows there. We are back to neutral. We're only down 13.71%. year to date now. And you know that number was much nastier than that just a short 2 weeks ago. But anyways, 25% off the rally there. We're officially in a new bull market. We've talked about that. As far as this week goes, you're going to see the headlines that say best week since 1974. I'll expand on that a little bit, and I'll probably expand even more in our Notes from Jazz email because we're pulling up a study on that. It is, in fact, the 7th best week on record for the S&P 500, coming in at 12.1%. All in 1 week, a full year's worth of gains coming in 1 week there. It's the best week since 74 for the S&P. The best week on record is actually in June 1931, just about 3% higher than where we finished off this week. So looking pretty good there. If you take the top 10, it's 12, top 12 best performing weeks in the stock market, S&P's history, and you look to see how did next week perform. Looking over the next week, you got an average gain of 1.69%, positive 60% of the time. It was 10 of the best of them. So 6 out of 10 times it was positive by an average gain of 1.69%. I hope that helps. Hope that helps there. Anyways, looking at the stock market again before we move on. V-shaped recovery. That's what we have right here. It's not what you want. You don't want a V-shaped recovery. Statistically, V-shaped recoveries are more wild. They're more volatile, and they tend to flirt with lows more often than not. We want more of a U-shaped recovery if you're a technical trader or someone that studies the market. V-shaped recoveries are always good for the novice, passive investor. You're excited to see things recover quickly. The longer-term, more focused investor goes, no, I don't like that. I'll take a U-shaped recovery. Give me just nice and steady there. And so I'll continue to point that out. We do not want the V-shaped recovery. All right, moving on to the sector breakdown today. We talked about tech being a little bit weaker on the day. It's recovered about 50%, a little less than 50% there. We'll show that in a second there, but just didn't participate today. Financials led the way. They are now extended in the short term, so seeing them pull back next week, seeing some volatility in there, don't worry about it. I mean, it's totally to be expected. Sometimes the semiconductors come in and they help support when financials are strong and tech is lagging behind. Sometimes the semiconductors pull up the back end of that. Didn't do it today, down 2% there. As far as the sector recoveries, let's see what we got here. On the chart, I've updated the stats from yesterday there. Here is every sector in the S&P broken down. We covered this on our Outside the Virus show earlier today as well. Percent of the recovery since the virus decline here. You've got healthcare leading the way now at 69%, 67% in utilities. In fact, 7 of the 11 sectors out there have now recovered more than 50%. So you can kind of see the leaders, laggards there if that's something that you're interested in. If, just for fun, right? Look, we like to look a little bit deeper. If we zoom in a little bit further, let's ask the question, okay, healthcare, 69% recovered from the top of the virus high to the bottom of the virus low. It's impressive, almost there. But if we look further, how many stocks in the healthcare sector are above their 50-day moving average? We ask that question because that's kind of seen as sort of a midterm indicator of trend. It's not a magic line or anything like that. It's just what other people look at, and I like to point that out too. So if we zoom into individual sectors, let's see if there are a lot of stocks above the 50-day, if they're still far away and working on it, what's going on there. And here we go. So here's every single sector there ranked from the most amount of stocks above the 50-day to the least. If you go through there, every single sector as of right now is technically come out of what's known as oversold conditions, just technically oversold. And you know what that looks like now because we just saw it. Really sharp extended drops well below the 50-day moving average is seen as oversold there. If you look in the individual sectors here, you can see inside of, for example, utilities, 53% of all the stocks inside the utility sector are already above the 50-day, right? So it gives you a feel for like what's going on there. If you look at healthcare, same thing, got 43%. In fact, if you go zoom into healthcare a little bit further, you'll find that the 57% that's left that is not over the 50-day is very, very close. They're within 5% of getting over the 50-day there. I don't know if you like this sort of stuff, but I just point it out to you. I saw some of the good comments there, but this is a breakdown of it. Naturally, energy's got the longest to go. I shared that with you earlier in the week to show how there were some energy stocks that were just way, way out there. In fact, I probably saved it. I'm getting pretty good at this. There you go. Here's where we look at the stocks closest to new 52-week highs and 52-week furthest from 52-week highs. All the red ones there are in the energy space off to the left there with 80, 70, 60% still to go. Not even any 60s, actually. So if you look at something like that, you can then go back and say, well, I understand why I'm being shown a chart that says 4% of the energy stocks are above their 50-day moving average. The rest are not. So just thought I'd point that out. Just some fun stuff to share with you there as we play with our little studies here. Oil wouldn't be right if we didn't cover oil today. Let's take a look. You got a loss of 7.5%. In oil, we had our OPEC meeting today, and although initially there were like reports of more cuts, less cuts, oh no, we're not going to make a deal, we are going to make a deal, ultimately we got the 10 million barrels per day spread over the different countries there, with Saudi Arabia taking the most of it, Russia, of course. The U.S., by the way, over time, we said, we'll do it, but give us our own schedule. 10 million barrels per day, it starts in May and June. Everybody was excited when that came out, and then we go, wait a minute, we already have a lot of oil, and nobody wants it right now because they're all sitting at home, they're not doing anything. And so then we just kind of sold off on the official news of that. Very interesting and volatile day for oil. The price of gold back above 1,700. In fact, gold closed higher today by 4.1%, making new highs in the process there. And basically, if you look around the different sectors, anything financial related had a good day, high volume. REITs had a good day, high volume, very extended. Utilities, you know, now did well all the way back to the 50-day. Extended in the short term. Basic materials, great rally over this whole week. Very extended in the short term. You get what I'm saying? Home builders had a nice rally as well. Already started to sell off. Very extended. Retail, nice pop today. Looking good throughout the week. Very extended. So hopefully you're catching my drift there. United Airlines had a good day today, 14%. American Airlines had a good day as well. Treasury Secretary Steve Mnuchin said the next big rollout of money that the government's going to dish out is going to be focused on the airlines there, so they did well. Coals, if you look at Coals, 13.6% there. I do want to share that with you. Look at Coals here. Here's a chart we showed earlier in the week. Coals with their biggest one-day percentage gains coming during the virus decline. Well, add another one to the mix. If you put in 13%, it'll go right smack in there. That's 4 of the last 10 best days in terms of returns for Coals coming during the virus pullback there. And we went over that on Monday, I believe. But isn't that interesting? The times of most panic give you the times of the best gains. That's people trying to pick off the bottoms there, realizing something is oversold. 4 of the best 10 days that it's ever had coming all within just the last couple weeks there. So that is Coles. If we move on here, you've got 23% of the stocks in the S&P 500 above the 50-day moving average. That's 116 names. First time we've been to triple digits in a long time because I stopped counting, actually. 5 new highs today. 3 of those are going to be REITs. Those are the 2 names we covered in detail earlier in the week. Digital Realty and Equinix. They hit highs, as well as American Tower. Notice how those are not residential related. If you're familiar with REITs, don't let that mislead you and you think, oh, it's time to buy REITs. Let me go pick up a REIT ETF or something. It's a very selective stock picking REIT type market out there, given what's going on. And Newmont Mining, the gold miner there, had a good day with the price of oil moving higher, as you might imagine, and that is the official darling of the gold mining sector. They did great, 13% on the day. No new lows, by the way. Franklin Resources, there you go. This is the brand name Franklin Templeton, right? If you want to, if you care. Anyways, this one's the closest to hitting new lows down. If it falls 10%, that would be new lows. Other than that, everything else is looking pretty good there. Moving on to names affected by the virus. We've been covering all week. Starbucks shares were higher today. They see a 47% drop in Q2 earnings due to the virus. Most analysts were thinking 5 to 10%. They came in with 47%. Stock's still higher because we know the news now. It's not that the news was bad, it's that now they know the news and you can quantify the price relative to the news. So that's going to be what earnings is going to be based on this coming season here, which starts on Monday, by the way. CarMax furloughing 15,500 employees because of the virus. Constellation Brands, 5% higher on the day. They're going to reduce production even more. They make beer, alcohol, and all the fun stuff we're drinking while we're at home. You've got Boyd Gaming, was basically flat. It ended up finishing lower by about 2%, I guess. They are going to... They're going to be furloughing most of their employees as well. I was just pointing out some of these different things here. Eventbrite, higher by 15% on the day. They're going to reduce their workforce by 45%. I'm not sure if they're profitable, actually. but they're in there. Microsoft flat on the day. They're not going to deliver the Windows 10X devices this year, so that's what that is. Ulta Beauty Salon, the largest beauty company, by the way, basically flat on the day, added 1%. They're going to furlough many of their employees, and salons, they sort of keep them separate in there, but they're salon employees as well. So there's a little bit more of this sort of virus-related news. Zoom, 5.5% higher today, despite the Senate saying you can't actually use it. We don't want you using it. We have some security concerns there. And then you've got Choice Hotels. I don't actually remember their brands. This Choice Hotels is a bunch of different brands. They're going to stop their buybacks, stop dividends for 2020, and readjust because of all the nastiness going out there. And because speaking of dividends, by the way, let's take a look. Here you go. Bank of America put out a note to their customers. Usually I save this stuff for our customers to kind of show what other companies are telling their customers, but I got excited today. Bank of America is basically saying, hey, the list of stocks over here, these stocks are safe in terms of dividend. Now, they didn't just randomly pick them. They looked for companies that didn't have a lot of debt and had a steady history of paying the dividend. And they weren't necessarily interested in the highest yield. They were interested in the safest yield for the people that actually live off dividends. You got Walmart, Target, Coke, Pepsi, McDonald's, names like that. And in the sort of second to last column here, you've got their dividend growth over the last 30 years. They tried to add that into the mix to filter out some of the other names to say, okay, we've got safe dividends now. Now, out of all these companies, which ones have shown steadily increasing their dividends over the years there? So I'm just pointing that out. That's Bank of America's news, not mine there. And one last thing before we wrap it up. Goldman Sachs. I thought this was rather interesting. Goldman Sachs said, we don't know if the market's going higher or lower. So rather than guide our customers, let's be on both sides. Let's say if we go higher, then this happens, and if we go lower, then this happens. I agree or disagree. Here's what we got. They basically said, here's a list of stocks that should do really well if we recover quickly, right? They picked Caterpillar, Chipotle, Regeneron, Salesforce, and Uber. Caterpillar, they said they like the yield and the technology they've got in their equipment, which is really impressive if you ever get to study that. Chipotle, they like their online ordering. Solid digital infrastructure is the way they said it. That's the way I say it. Increased demand for delivery for food is what should help Uber and people getting back to ordering more and stuff like that. I think that could have went on both lists, actually. But their idea with this, by the way, was that Uber wouldn't be hit as hard during these times, so they'd probably recover faster. And Regeneron, we already know they're working on those two drugs. Those are some of their picks, and those are their targets that they think that they're getting to. It's a 12-month target, and I just put that on here for you that if it does make it to that 12-month target, that would be your potential return as of today's highs. They then went on the other side and said, well, wait, what if it takes a little longer to recover? Here's a list of stocks that would probably do well if we took longer to recover. Amazon, Activision, Lockheed Martin, McKesson, and Procter & Gamble. Amazon, obviously, you guys get that one, right? People just order stuff left and right on there. It's pretty much all we can order from these days. And it's also outperforming the market by 4%. They pointed that out. Lockheed Martin, they like government defense spending there, and McKesson is actually a pretty smart pick there. If you look at McKesson through a lot of the different recessions that we've had, study back as far as you can. Not only that, but a lot of the volatile times that we had. Not even recession, but just volatile pullbacks. McKesson holds up. And so they threw that one on their list there as well. Hey, Monday we've got earnings kicking off here. I hope you like Luckin Coffee. Why even bother? Just delay the earnings until you get your dough straight, because I don't even know what they're doing there. And you know what? As I look at this here, they may not be reporting their earnings on Monday. This stock has been halted pretty much indefinitely. They've got to get their numbers straight. So I strike that. They will not be reporting earnings likely on Monday. It may trade on Monday, but I bet you they're going to maybe delay there. Looks like. That's what I'm gathering here. But you've got Carnival Cruise Lines in the mix there, so hopefully that's something you want to look at. And that's basically all I got. I'll take a chance here and try to answer some of your questions, and we'll call it a day. What do we got? Choice Comfort Inn. Yeah, that sounds familiar. Choice Hotels. I'm not much of a hotel guy. If I stay in a hotel, it's a Disney hotel. I'm spoiled like that. We don't really go anywhere else. Yeah, that's a good point. Yeah, adding Chewy in there as well. They can keep their profit margins. Yeah. Oh, yeah. Anyways, I will look to wrap it up from there. I know there's a slight delay there, but I'll change this real quick, close this guy out. That's pretty much it. While you're asking questions, check out this thing. This is going to be my new toy. It's the Stream Deck thing. So we're redoing the whole closing beat, and these things light up as little screens. It is awesome. So I'm hoping to have all the different buttons and stuff, be able to just press and change things. Pretty excited about that. We'll see what happens there. We're going to be doing Stock Madness on Saturday. Yep, we'll post that on Saturday. It'll be the update, right? Because we're doing them in 2-week increments. So this week we'll just update you on the picks and how they've done compared to each other, but it won't be the official competition there. Next week will be the end of that round. Yep. V, U, L, or W-shaped recovery? Well, based on how we've already started the V-shaped recovery, you'd have to lean more towards a sloppy W in this case. I'll take it, right? I would prefer a U-shaped recovery, but I'll take a sloppy W that maybe sort of looks like a U for the sake of having a stronger, more prolonged next bull market that we have there. Yeah. What about the Russell? What do you like about the Russell there, James? Welcome, James. I like it. So the Russell, if you're interested, we covered this on our Outside the Virus today. The Russell small caps versus large caps. Those are tracks, small, mid, and large cap. Usually there's a pretty distinct and clean correlation between them. Right now there's such a wide spread that people are playing for that convergence of the spread there. And you saw that today in the Russell outperforming the large caps by twice. Right? So people realizing that gap in the spread there, if that's what you were asking. Yep. Thoughts on Tesla? I like that it's calmed down in here. I don't think there's any reason for it to blast off and just head back to those highs. That was an overextended sort of rally that, which is a great example, by the way. This is why you want a U-shaped recovery, because anytime there's something goes too far too fast, it can't sustain that. Imagine this hill getting steeper and steeper and steeper. You can't sustain that rally. So as an investor, you don't want this unless you're planning to be active. You like the slow and steady and boring uptrends. Those can go for long times, like Waste Management did. Anyways, so basically just chopping around in here. It's sort of subject to the market and their earnings coming up as well would be my short answer. No news on when Luckin's going to start trading again. It is halted, remain halted until the company has satisfied the exchange requests from the in this case from NASDAQ, to get their dough straight. You ever going to let people call in like Kramer and Mad Money? I don't even know how they do that. Do you? How people call? I have no idea. That'd be cool. I just don't know how that works. Thank you for the kind words there about the show. I appreciate it there. Yep. You can't believe Verizon's already making its way back. I like Verizon in general. What a great move on Verizon. Back to the 200-day. Same thing here with Verizon. It's had a great run, probably a little further than it should have gone so quickly. If it falls next week, nothing to worry about. So you would just totally expect it to take a breather there, Yep. Cruise lines, yeah, they did well today. I mean, you got Carnival was the underperformer out of the group, right? Oops. There you go. A little bounce there. I mean, on the cruise lines, they're going to be last to really get any serious help if they do get any help at all. But just bottom pickers there. People trying to pick on a really severe discount on these things. I can't blame those people for doing that. Yeah. I love it. All right, I'm going to wrap it up there and call it a week, man. It's a rough day. I probably had more Oreos than I should have eaten today, so I'm going to go sleep for 14 hours, and I'll see you guys next week. Remember, no show tomorrow. Won't be around. We are closed, locking the doors, going and hunkering down for a day or two. So we'll be back next week. I appreciate you guys watching. Have a great weekend, and we'll see you then.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.